What happens when three fintech nerds get together to talk about industry trends over hot wings, and it happens to be in front of a live studio audience? Well, you get the latest edition of Fintech Hot Takes with Alex Johnson, Simon Taylor, and myself, refereed by Peter Renton at the University of Utah's 2026 Fintech Exchange. This episode is powered by US Bank, some spicy sauce, and some even spicier takes as we discuss AI, financial nihilism, and those trends that are reshaping the banking and fintech world. Don't miss the entire series coming out this month on the Hot Takes stage, brought to you by US Bank.
Good afternoon, everybody, and welcome to a special session we have going on here with Fintech's leading voices, the all-stars to my right here. And we are actually going to be eating wings live on stage here right now. Tell us why we're eating wings, Jason.
Yeah, Jason, tell us why. It's actually kind of your fault, Alex. So during COVID, when probably no one listened to podcasts because they weren't muting anymore, and Alex and I were talking about something else, I'm like, I kind of want to do a Seinfeld type episode, right? A show about nothing. I'm like, let's do a podcast where we don't really have an agenda. We'll just kind of do our hot takes. And he's like, oh, kind of like the hot ones. It turns out I love hot ones. And so fast forward about 3 weeks later, I was the proud owner of 2,700 bottles of custom hot sauce because that was the minimum quantity to be ordered. And we've been doing it now for almost 6 years. And what it signifies, one, it's kind of fun. But two is it's the unfiltered, let's just give our hottest takes. So a show about nothing. Okay. How Seinfeldian. Okay, so we are going to get straight into it. Okay, we're going to cover a bunch of different topics today. First one is generative AI, and Simon, I'm going to start with you. Yeah.
Because you've written more about this than just about anybody, I think it seems, in the last 6 months.
I can't stop myself. I'm obsessed.
So tell us a little bit about, when it comes to generative AI, what are you seeing as the real world use cases that are gaining traction right now?
Yeah, so let's start with what's not. The opposite end of the spectrum is agentic payments. I think there's a lot of hype there, but agents aren't buying things.
I'm going to serve myself a win.
Yeah, go right ahead. Be my guest. Then there's agentic commerce, and the numbers there that blew my mind were this was the first agentic commerce Black Friday, Cyber Monday. So 1 in 6, I got the number wrong, purchases during Black Friday and Cyber Monday was AI assisted in some way. So people had started their journey or their research in the middle of ChatGPT or some sort of LLM. And that really changes the top of the funnel. It's early days, and you can see how that turns into agentic payments. But the low-hanging fruit is everything middle and back office and operational. So you're seeing name your workflow here with treasury management, doing your accounts payable, accounts receivable. Instead of having an offshore ops team working that, you have an AI agent working that in your AML. Instead of having 95% of your alerts being false positives and poor ops staff banging their head out, dealing with, it's a fake, you know the Homer Simpson meme? Where it's like, it has the doll that pushes the button all day. That's kind of what it's like working in compliance ops. So why not have an AI agent do that? Well, that's in production. There are some very large financial institutions in production with that right now. So you've kind of got this spectrum of like where we are, which is, middle and back office ops processes, that's not scary, and we can kind of condition around it. The adoption of that's still early, but the space is moving just so fast. We haven't really seen like a Harvey for fintech yet. This is like
Is Harvey the lawyer one?
Harvey's the lawyer one. We're starting to see it in healthcare a lot, where you're actually replacing the jobs of lawyers increasingly, and law firms are using it, and you're sort of a lot of the low-level employee work in Harvey is now in those law firms. They don't need as many junior staff, because NDAs and workflows, things like that, are just taken care of. So we haven't seen that really come to financial services yet, where you've got these entire companies where their back office and middle office is that. But there's a company called Catena Labs, started by Sean Neville, who was a co-founder of Circle, that is kind of like Mercury, but if it was all built with AI agents, like all of the staff. And that is something that's a real trend to watch.
So can I wave the AI flag?
Yes.
Second. The data around the number, this is going to be maybe my hot take of the day. Maybe I'm Fintech Takes, so I'll be hot. Is we talk about how much commerce for the first Black Friday that had AI started with AI. I think if you unpack the number of people who didn't know they were using AI, they thought they were doing search, but it was what showed up at the Google and these other things. To me, that is like a bunch of BS for the AI industry to say that is AI. It is search. They think they're doing search. They're doing it because other than Money 2020, where everyone pretended agentic commerce like was here and ready, right now, based on who the big sponsors were, most consumers aren't really ready for agents to take over and to do their spend.
But that's why I separated commerce from payments.
Yeah. But I'm saying, I'm not calling BS on you, I'm calling BS on the industry. I'm like, oh, this amount of commerce, started with AI. It's like, well, you're not really leveraging AI to go do that if you don't realize you're using AI. It's kind of like saying, oh, when you rent a car and look at the uptake of electric vehicles. Well, if I didn't know I was renting an electric vehicle before Hertz gives me the electric vehicle, we're not talking about the penetration of electric vehicles. And that's where I call BS on a lot of the industry. In the impact, I feel like the AI narrative is so far out ahead of a lot of the use cases. But I think you're right, where we're actually seeing it is very non-sexy things. The non-sexy things are where it's working. And I can't wait to see the glut of the law firms and other places that thought, oh, we're going to replace the low-level people and they're now going to be agents, right? Like we have agents on payroll. That's a great story for Wall Street. It's a great story to have Microsoft putting out or for Sam Altman. When we see the backlash, it was like, oops, that didn't quite work as well as we expected. It's going to be really interesting.
But look at Wall Street right now. I mean, it is a bloodbath in SaaS stocks because of the stuff that Anthropic's releasing, which is, again, if you're not at the forward edge of the curve of this stuff, like I have sat there a couple of times with Claude Code over the holidays and just gone, I won't have a job. This is terrifyingly brilliant. Create a presentation out of my granola notes. Okay, you did. That was really good. So I think there's what some people are doing in some corners and the diffusion of that, and those are two different things. So, wind the clock forward 5 years' time and what the nerds are doing on the weekend will be what you're doing for your day job.
Interesting. Can I ask one question about this? I'm just eating popcorn and watching these guys talk. How does the regulatory angle fold into all of this? Because, my experience in banking and fintech is that regulators tend to be quite a ways behind the use of their supervised entities' use of technology generally. And that's not counting AI, which is just supercharging that. Henrichs, you're maybe the best person to answer this. When you talk to banks about AI, are they hearing from their regulators? What's the perspective on that?
So there's some things I can say and some things I can't say, but I will say regulators themselves are beginning to use AI, which is very refreshing. And I think one of the more interesting applications of AI for me is when we see it as sorting. Because the generalized use of AI I see it as it helps us do shitty things faster and cheaper, right? Like it just increases mediocrity. But if it can help filter what are the things that actually are meaningful, that require creativity that I have yet to find that an LLM or any other type of generative AI can do really well, that great insight piece of it. And I'd say this is where regulators are using it too, is they can quickly churn through the things that Simon talked about, right, is the bird pushing the button. Use the AI to be the bird pushing the button to get to the things that are meaningful, that require a level of wisdom that we have not yet been able to imbue into a model.
In some ways, I think that's one of the more exciting things, if we can say that about this space, because the regulators are going to have the same tools as everybody else, and it's not a huge lift to implement some of these tools that hopefully the regulators. I know you talked to Raj Date here in Utah last year about this topic, where the regulators are paying attention, and they'll be able to, even with fewer people, which most regulatory agencies have, I think now, may be more effective in 2 years' time than they've ever been.
Yeah, it's an interesting theory, right? That there's this widening gap between regulatory supervision and what's happening in the industry, and the gap is going to get wider regardless of what we do. And AI and other technologies will accelerate it. But the idea that the technology can be leveraged to close that gap and to get ahead of it, I think, is really interesting. Jason, you and I were talking on a podcast this morning about the idea of maybe having, like in the future, when you open up an account with Bank of America, it's your first time working with Bank of America. At that same time, a digital twin of you is born that becomes your customer service advocate that follows you around and is CC'd on all the emails you get from Bank of America. Every time you call the Bank of America call center, they recognize your number and they automatically conference in your AI agent to listen in. I think that's a really interesting sort of conceptual framework to think about how some of these processes might change. But the part we didn't talk about is, if I have that AI agent, okay, then if I have a problem or a dispute, or I submit a complaint to the CFPB when the CFPB exists again, that would be a way for them to get like the really quick download on, well, what happened, right? Because right now, if I submit a complaint to the CFPB, A, no one's listening, but B, it's very difficult to like give them the full narrative and all the data on me. And you have to sort of hope that they'll be able to track it down, or maybe they'll just be able to kind of bully the institution into fixing the problem for me. This would be a much more data-driven way of going, no, this is all the context of Alex's relationship with this bank, and then that gives you the context to solve this problem.
I think it's so interesting, the diffusion of innovation being possibly further ahead in some of the regulators than in some of the larger or mid-sized financial institutions. Because one thing I hear a lot, and I'd be interested in your views, is, but what about hallucination risk? And what about my data? And what about staff reporting paper 11-7? And how do I do explainability? And then if I speak to the regulators, there's a desire to get on the front foot, but it's state by state. And then you've got different state level AI regulations coming out, but they're all using it themselves. And I think then I go look at the fintech companies who have built custom AI agents internally to do specific things, that have thought about the guardrails. And I think you can learn a lot from, it's not just using ChatGPT and asking it stuff and being a bit frustrated at it that most people experience, or Copilot. There is this other world of AI out there that's starting to be doable. And there are ways, I think, to make it compliant. We just have to get used to that and start working with it more and more. And maybe the regulators actually using the tool is a good thing, and it means it's going to be a bit easier.
Well, I mean, and the getting used to it point is a good one, right? Because sometimes, like, it just requires us to accept that the world works differently than it worked before, right? And I always go back to the example of when elevators first started showing up in skyscrapers, there'd be elevator operators, right? Yeah. The elevator operators didn't do anything that we don't do today, right? They would push the button rather than we push the button. The reason they were in there was because we were very afraid of getting killed by an elevator, because we'd never seen such technology before. And elevator operators was a job for a generation, right? But eventually we sort of accepted, like, I'm taking a risk here. The risk is the same, whether the elevator operator's in there or not, and it doesn't really materially change this. I think about that a lot with like AI and hallucination and some of these things. Like, maybe the standards we have around fairness and explainability and some of the stuff that I know has been talked about on the stage today, maybe our understanding of those, which were codified into law in the 1970s, maybe that needs to be updated to match the technology.
And I think that's begun to change. Right? You hit a really important point, Simon, is we paint with a broad brush, or for the purpose of this, we act like all hot sauce is the same. It's not all the same. No. And not all AI is the same, but we throw it in, and I'd say on that explainability, having many of our banks gone through multiple exam cycles now, the idea now in that regulators get fully is not all AI is the same. You don't need explainability in the same way that how you talk about your underwriting model when you're talking about using AI to do sorting of complaints, or automating, complaint processes, or automating the capture, or improving OCR, right? Talk about a mundane thing that is finally really improved.
It's actually now.
It actually is doing better. Now I just wish Siri could figure out that my youngest child is not named Stalin. But side note.
Okay, let's move on. We go to another hot topic in fintech right now. We're talking about stablecoins, and I want to go to you, Simon, again, because you had like the tokenized podcast. If you haven't listened to it, do yourself a favor. It's a great show where with one of the senior people at Visa in their space and in the crypto space. So volume at Visa, well, it's minuscule compared to its total volume. It's growing dramatically. I was surprised what I saw was like they crossed $5 billion in settlement in stablecoin
in a quarter.
Oh, was it in a quarter?
Yeah, so they 5x'd in a quarter. So they went from 1 billion to 5 billion in a single quarter of earnings. And from everything, I'm hearing from around the industry, that is expected to continue. And what's so interesting to me is, as somebody who's been like the disappointed dad of crypto for more than a decade,
Yes.
I'm like, come on, stop being speculative games. It's really lovely to see that crypto prices are in an absolute bloodbath, and yet every conversation I have is about utility and revenue and doing meaningful things for customers that make a difference. So the volume is growing quick. It's still tiny. It's absolutely tiny. But the meaningful stuff is actually more around corporate treasury and cross-border and payouts as well. So Deal, DoorDash, Instacart, Klarna, they're all thinking about that sort of stuff. And in my day job at Tempo, helping them understand how to do that and how to make that work with their bank partners and how to do that in a compliant way is the type of thing that these large sort of platforms are now actively wrestling with. So we are just seeing the beginning of this adoption. You've got the early adopter crowd in there, but the innovators are now starting to come into it. And if anything, that's accelerating as the price goes down rather than the opposite.
Yeah.
It's so nice.
Any other hot takes on the stablecoin front from you guys?
Well, can I just say that the argument on stablecoin yield is the stupidest thing I've ever seen in my
That
entire
is
life.
so dumb.
It's terrible. So, like, the shorthand version of it is that
6 trillion is going to leave the bank.
So, if you're Brian Armstrong at Coinbase, you think that fractional reserve banking is a conspiracy against consumers. And if you're Brian Moynihan at Bank of America, you think that $6 trillion is going to leave in deposits because stablecoins are able to offer yield. Neither of those two things is true.
Don't say it to count offer yield.
Well, like Coinbase is offering it right now. Are you losing a bunch of customers to Coinbase? And if you are, maybe you should think about the utility that your operating accounts provide and stop worrying about yield, right? Like the customers you care about, which are the base of your business if you're one of those very large banks, and it's what makes you strong. It's the totality of the relationship that you have with customers.
Yeah.
It's the access to lending. It's the ability to call up your wealth management advisor and ask them a question. Like, it's things that won't be disrupted if Coinbase is able to pay 3.5% on holding USDC, which, by the way, if stablecoins are able to offer yield, they will compete that down to zero or very close to zero, right? So, like, it's not a durable competitive threat. And I wish that the debates around stablecoins and stablecoin policy were more, like, moored in reality, which they're just not.
Yeah. Well, I mean, the reality is if a bank loses its stablecoins because their products suck.
Right.
Like, that's the reality is it's not the presence of stablecoin, it's crap products.
They value inertia. Like that's what they want. They want to keep that $6 trillion earning 0% interest.
And I think that far from being a threat to financial institutions, stablecoins are an amazing opportunity, right? Like they are a settlement rail that is instant 24/7 and cross-border. Would your fintech programs, would your customers like an instant 24/7 cross-border rail? And how many banks are actual correspondent banks versus how many have to work with a very expensive, very slow correspondent bank? The thing I've been working on for a lot is like, most banks use ISO 20022 messages now for interbank settlement. You can keep all of that stuff that you have to make stablecoins backwardly compatible with your existing systems. This is not hard to do. People are like, oh, I have to do a core systems upgrade and I have to do something really big and really crazy and I'm going to have to get a whole new licensing regime and everything else. It could actually be really simple. And so if you think about fintech programs that want to offer their customers instant 24/7 cross-border using stablecoins as a settlement instrument, that's a revenue opportunity. But how's it going to actually settle back to a bank account? Well, I need a financial institution that can off-ramp that. And so that just sounds like a revenue opportunity.
So are there banks that are coming to Tempo today wanting what you just described?
Yes, of all sizes.
Interesting.
Of all sizes. And I think what a lot of people are just lost in the nuances of, well, how does this operational process work? And ISO 2822 just solves it. It's like, well, you can send a message. You just run all of those processes. It's just the payment that gets sent out at the end. Like instead of doing a debit credit here, it's a stablecoin that moves.
I wrestle with this. So I was one of the only U.S. investors in Currency Cloud, right, back in the day. Where did all of this cross-border come from, right? Like I live and breathe with, community banks up to the some of the biggest banks. They're all like, oh, the use case is cross-border. I'm like, when the hell did you guys start doing so much cross-border? Because 5 years ago, you were not doing all of this. But that's the use case you want to point to. And also, by the way, you can't open an account digitally yet. You're all in on stablecoin. You want to talk stablecoin. Get your act together and go do digital account opening first before you worry about cross-border, which doesn't exist.
I guess it's the difference, though, between consumer and platforms. Like if if my client is a fintech like Klarna, then do I want to offer them that settlement for the cross-border?
And have to, right? And the irony, though, being, if done right, we won't be talking about this in 5 years because it is just a silent, ubiquitous rail that has taken friction out of the system.
I think we'll only talk about it when we complain about it. Like stablecoins.
I believe as well the letter after the stablecoin is not going to last. People are going to see dollar balances. They're not going to see stablecoin balance with a weird letter at the end of it. Because what does that letter signify? It's like the credit risk of the issuer. You don't see that when you're thinking about your bank or non-bank financial institution, right? That's all it's for.
Hey, let's take a quick pause here because I want to tell you about a conference I actually like. If you've ever gone to a fintech event, worked the room and left thinking, I met a lot of people, but nothing really moved, you know the problem. Fintech Meetup is different. It's designed around outcomes, not wandering the expo floor. And that fits us well, and that's why we appreciate their support of the show. Last year, people booked more than 50,000 double opt-in meetings. And that matters because it means you're not guessing who to talk to. You're sitting down with buyers, partners, and decision makers you actually want in the room. That's also why Jason is spending time there this year. He'll be leading a very real, very grounded conversation on AI, no hype, no futuristic nonsense, just what's actually showing up inside financial institutions and what leaders should be paying attention to right now. So if you're already thinking about your 2026 calendar, tickets are already on sale, and you can save if you register before March 6th. Just search Fintech Meetup and check it out.
Okay, I want to move on to a topic that hasn't been discussed here yet today, but it's one that I know, Alex, is dear to your heart. I'm really, as a parent of teenagers, I'm very much focused on this as well. This is financial nihilism, where I know you had at your event last year in November, you had Frank Brotman do a big deep dive on this.
Yep.
He's working on a whole bunch of different things around it. That the reality is, or maybe is paint the problem and then talk about some of the ideas to combat the problem.
Sure. So financial nihilism, basically the concept is that, and there's been actually really great academic studies on this, there's a point at which people give up. And they can study exactly what that point is. And when people give up, their entire approach to financial services changes, right? So they stop saving money. They start investing in riskier assets. They start spending more on their credit cards. They actually work less hard at their jobs and seek out additional economic opportunities. And so what's happening is, in a macro sense, and this is something we don't have control over in this room, affordability is a huge issue, right? And the way that academics study this is they look at increases in home prices and then correlate that to changes in the behavior of households that live within those geographic regions. So if home prices shoot up in a particular geographic region, what they find looking at the financial data of households in those regions is a change that indicates that they gave up. They are not planning to buy a house anymore because they think it's out of the realm of possibility for them. And so instead, they're going to YOLO their way into risky investments. They are going to spend more to sort of numb the pain of not being able to meet their long-term financial goals. And they're not going to work as hard.
And then they guess.
And I'm going to gamble. That is very, very bad. That is bad for society. That is bad for our economy. That is bad for our families. That is bad for everyone. Except it's not actually bad for everyone, because what I just described, if you are in the gambling business, you want people to give up. If you are in the spend as much money as you possibly can and don't ever worry about saving or questioning that spending decision, which, by the way, a lot of people who are pushing agentic commerce want you to just spend more frictionlessly, then giving up is good, right? Yeah. And so I think, practically speaking, in 2026, the financial services industry is made up of two different parties. There are the companies that want to convince consumers to give up and then profit from that, and there are the companies that want to convince customers to not give up. I hope everyone in this room is on the not giving up side. That's the side that we need to focus on. If you've seen the advertisements that Coinbase runs, we know what side they're on, right? They are trying to paint a picture of a dystopian hellscape that you're never going to get out of, so you might as well buy crypto. And now they've embedded prediction markets so you can do sports betting in Coinbase. That's insane.
Well, it's diversifying your risks.
Well, yes, that's
diversifying your risks. It's up to the odds.
I am a little bit heavy on meme coins, so I think I'm going to get a player prop bet on this player in the Super Bowl.
As a parlay, yeah.
As a parlay. This is crazy, right? And at the moment, we don't have a regulatory infrastructure that's going to stop or even slow this down. It's really going to accelerate it. And so it is incumbent, I think, on everyone in this room to think about, what can we do to give customers hope? What can we do to help them not give up, right? And the good news is, I think there's actually a lot that we can do. There's a lot of low-hanging fruit, right? I'll give you one example, and I'd be very curious to hear your guys' thoughts, because I know you care about this a lot. The home ownership thing. The homes are more expensive. There's not a lot that we can do about that. We have to build more houses. But I also have found that home ownership has no gentle on-ramps into it at all, right? So everything in the mortgage market is set up for, you're ready to buy a home and we would like to help you with that transaction. Fantastic. So what if I raise my hand and say, 5 years from now, I would like to buy a house? Who's going to help me with that? What do I do? What do I need to know about buying a house that I don't know? Because guess what? Even though collectively we all buy a ton of houses, I'm only going to do this once or twice in my life. I don't have any wisdom or knowledge about how this experience works. And particularly if I come from a household where home ownership was not something that I experienced growing up, or my parents weren't able to help me understand how this works, I'm going into this experience, the most important financial services experience I'll ever have, blind. I don't know how much money I have to save. I don't know if there are accounts that are tax-advantaged accounts for saving for a deposit, for a down payment in my state, which exist, but no one knows about them. Yeah. I don't have any idea how my choice of where I want to live or where I want to work is going to impact my journey towards home ownership. So, like, savings accounts for down payments with all of that intelligence wrapped around it, enabled by AI, that would help people not give up. And if we solve that problem, if we even incrementally adjust that behavior, we will see huge gains on every financial health metric that we care about, because people are living in a disciplined way to try to get to the future they want rather than giving up.
And there's so many low-hanging fruit features that every financial product should have in the world, bar none, which is simple things like rounding up to the nearest dollar and saving that for somebody. Like, default that. Don't make people have to opt into it. Default the savings goals and the savings challenges and bug people about it and use their notification. Because you know what? The gambling companies are not shy about notifying their customers. Why would you be shy about trying to help them?
The gambling customers will send a notification to your customer at 11:30 because they know that on average they go to bed at 11:35 and they want to try to get one more bet in before the day is over. That's what they're doing. Yeah. What are you doing?
Say not that. Like, I think that's so possible. The other feature that Monzo did in the UK a long time ago that I am surprised is not in every single banking app in the world is the gambling block. It's like, I can't stop gambling. I feel like I'm in a hole. And it's just a button you push that gives you a 48-hour restriction on card transactions to anything that's gaming or gambling. And if you want to undo that, you have to nominate somebody else that they're going to call, and that person can unblock it for you. You are giving that customer a tool to say, sometimes I get myself into a hole and I just need space to breathe.
That was a while ago.
But that was like 2018.
Yeah.
So why is that not in every single app? And so to the hope point, it's not like these solutions are hard. It's just we have to know about them and do it. I think that's the other thing. Well,
Go ahead.
The last one I want to give a shout out to is a company called Quinn. There are probably many others like it. They're doing like wealth management AI for the people that are not yet wealthy.
Yeah.
And it's just, how do I take that personal financial advisor who just is there with you, saying sensible things? Because look, every time you sit with a wealth advisor, they essentially teach you portfolio theory and go like, this is how you should set up, and you should build a cash flow waterfall, and you should have some funds for resilience, and then you should start saving, and then you build a 3 months runway, and then you start thinking about your 401k. We know what the formula is for financial resilience. It's not like this stuff is beyond us. So why not just turn that into software and make it available for everybody? And that's kind of what they're doing. The problem is financial advice is often a regulated activity. So doing that with AI is a specialist task, but it's good that companies are doing it.
I want to roll back to the Coinbase. I love the example with Monzo. I think part of the nihilism is we treat democratization as if it's a moral imperative and it's a good thing that we democratize. And the reality is, for a Coinbase, they're absolutely amoral in their approach, and they're pure profit seeking in what they do to take the friction out. The opposite of a Monzo, to say, we're going to put friction in because it is in your best interest to help you make choices that are better for you. But there are lots of things that should not be democratized that we celebrate because it's like, oh, we should create access for everyone because that's good. We should democratize sports betting. We should democratize derivatives and leverage and all these things that could be absolutely catastrophic for you. And then we celebrate and are like, look, we democratized, and sure, your life is horrible and you're never getting out of the hole, but we created open access for you. Wasn't that a great moral gain of what we put out? It feels like part of what I want to see with the AI revolution is this ability of accountability around outcomes that we want. Can I have an AI agent that is actually back testing? Hey, Polymarket said that being able, what was that ad, Alex, you and I were sending back and forth, or maybe Kia sent it to
you
us.
trying to pay off your student loans by betting on.
Yeah, betting on, or I wasn't going to make my rent, but thank God there was Polymarket. Real ad, right? It's like, thank God there was Polymarket because like I was able to make my rent. It's like, no, there should be something that backtests what I see and the choices I make to say, you know what, Polymarket's kind of full of crap. It maybe doesn't have your best interests in mind.
Well, and just like recapping, like, you lost a ton of money last year trying to like outthink the market. Maybe think differently, or another
maybe efficient market theory. It's better than you, Alex.
Yeah, I mean, possibly, right? And I think the other thing that just ties to that, and I always hammer this point, 'cause I think it's really important. Kalshi pays interest on money held on its platform.
Yes.
They are going to at some point solicit direct deposits of paychecks. They are competing with banks. I know it doesn't look like a bank. I know it's not regulated like a bank, but they are trying to become a bank in the lives of their customers because having that money captive and it can never escape the gravity well that's being created around prediction markets, that's good business for them. So if you don't think about it as a direct competitive threat, you're not thinking about it the right way.
And on that, if you're spending cycles being involved in the yield debate instead of that, I think you've completely missed where the threat is as an
I
organization.
totally agree.
I want to build on that and I'll let you go back, Peter. In 2001, when I was a VC, was looking at a deal around games of skill betting. So you couldn't do betting in the US at this point, but if you played tic-tac-toe or Battleship was one of their most popular, you were allowed, because that was not gambling, it was a game of skill. And the point of contention was they were counting loads as revenue, right? So money deposited, they counted as top line revenue. I'm like, well, that's not true. Until they unpacked, no, you will play that game of skill until you lose all of that money. It is actually just how many cycles, to your point, on spending cycles, is I will play tic-tac-toe until I have lost all of the money there. So when we apply that to Kalshi, can you imagine that they have your direct deposit, you're going to go make money and make rent because you're just going to keep betting until you get there?
Well, you can, like, there's apps now that you can take out loans based on the open positions you have. I mean, like, they're building an entire financial services ecosystem around this speculative activity that is not regulated by the states. It's not even being regulated by the CFTC right now. Like, it's a huge problem. And so, yeah, and I think financial nihilism is the challenge in financial services in 2020.
But I think, as you point out, there are things we can do right now. I also think it's a solvable problem. So I want to go back to something you said, Jason, that part of the problem is that we have to kind of do things for ourselves. Like there's no on-ramp, as you said. And not only that, there's like, we all know the information about how to live a financially healthy life is out there. There's millions of videos that talk about, that have good advice, but so advice is not the problem, but the trouble is we get paralyzed because we don't know exactly what to do. And that's where I think the AI agents for helping you make, I just did an interview with, I published on my podcast just today, the CEO of Vestwell, which is a B2B company doing, they basically help you sign up for a 401k. They actually run a lot of state programs where, like if you're in New York right now and you're a small company, you have to have a 401k program for your employees.
It's the default. And that's the behavioral psychology of defaults.
Right.
Like if you default to doing something, people are much more likely to do it, and they're quite grateful you did. Like, who's angry at you for defaulting them as part of your day job to having a 401k plan?
Right.
Like, is an employee really mad about that? Like, is that a lack of choice?
But you only get 40% opt-in. If you make it opt-in,
Yes.
40%. So having it be an opt-in, but the thing is, what he was saying is that they're at Vestwell, they're less than a year away from the rollout of their agentic assistant. And so within three years, I think we will have a way to actually take action that doesn't paralyze. We'll have our AI system know everything about us, and then they'll be able to.
But it raises a question: whose side is the AI on? Right? Like the adage
a good point.
of like, if you're not paying for it, you're the product, right? So if the company is providing the AI to help make the choices, how do I know those are the best choices for me? So using your fitness example, who doesn't get angry when you make the healthy choice when you go to Panera and you get the salad, or the Chili's do that, you realize I just ingested 1,600 calories. Like I was better off getting the burger and fries than I was getting the salad because I thought I was making a healthy choice, because that's how they presented it for me. So I think there needs to be an accountability with the AI.
Which is why I wonder about ChatGPT and ads. Like the Anthropic ads sent it up absolutely perfectly, but there is a separation of concerns and interests there of what product are you going to push, and is it really on your side? And are consumers going to be able to run their own AI? Like, what does that product look like? Who builds it? How do you pay for it? Is anybody sophisticated enough? With technology, probably not. You're going to be.
Or is it only the wealthy? Like, do the wealthy does they make it worse again? They can pay for it. They have someone.
That would be the concern, right? Is how do we, again, I don't like the word democratize either, but if this is a tool that can really drive better outcomes, how do we make sure as many people have it as possible?
Yeah. Okay, so we've only got 3 minutes left. I want to close with a couple of quick pot takes. One fintech company that you think will make an impact in a surprising way in the next 12 months.
All right, I'm going to steal one from Henrichs. Careful, which does really great work to help build financial safety for elderly consumers, their families, caretakers. They're building a whole sort of operating system for that part of the customer lifecycle that is really underbuilt right now.
Still one of my favorites.
I know.
Simon? I'm drawing a blank. I write up four things.
Every single newsletter.
And I can't remember any of them. So Jason, go ahead. Give me
I was going to use careful, but I'm going to say I don't know the one, because this is the part that's fascinating me, is so much is changing so quickly that, we as on our investment arm, what we look at is hard. We talk about the competitive advantage of being late to the market, particularly as we're looking at AI for compliance things, because every week we're seeing something that is that much better, built on a different model that's much further along. And to Simon's point about being able to develop products, we're seeing people that are, 1 or 2 person shops building things that before you'd be like, wow, I would have expected $2 million of seed money and you to have an ex-Google engineer building this thing. That I think the potential for micro apps, this is where I think the micro apps as a category is going to be really interesting. But I'm not sure how that plays out, because if you look at the competing flow right now, is the amount of venture money that's flown in that is concentrated. It needs to do bigger and bigger bets, but the amount of money needed is getting smaller and smaller, and the applications are getting narrower and narrower.
I think that's changing. Venture funds are raising less than ever outside of the top few at the top end because the 2021 vintage absolutely killed IRR. And then the cost of creating these solopreneur companies has gone right down. You can get to $10 million. There are many examples without VC funding. So now the VCs actually have to add value.
But if you look at, though, the top are raising all of the money, the solo GPs got wiped out in the US.
Yeah, entirely.
So what was your company?
Yeah,
I was going to say that category is the micro app, right? It's a very narrow.
Okay, so no one company.
No one company. It's
Okay,
a micro
I have
app.
one that I think might actually be an interesting, useful prediction market.
Oh god.
They're called spend.market. And what you do is you connect your plan, and what it does is then anonymize your spending data and behavior, and then just pays you for access to that data. It's a tiny amount, but your worst case is like, I'm giving you anonymized data and you're getting like a couple of pennies for it, depending on how much you transact. You can imagine as a financial institution that was sharing that, or a bigger organization, that would be a more meaningful revenue source. But then on the other side, now they have the most accurate consumer spending data in the world, potentially, of any data source, because consumer spending is not real time. It's not across all of the different aggregators, and it's not based on real world activity. And then by being able to trade that, you get a forecast of the outcomes. Now, that would be available to consumers. I'd like that to be a capital markets only thing, if I'm being really honest. But what I think is interesting is this intersection of markets and data. I think there's something there, and I don't know if it's this company. I think somebody's going to get that right eventually, and it's going to be massively consequential, because there's a reason ICE, the New York Stock Exchange parent, is investing in Polymarket and everything else, is they see a step change function in how capital markets work with this new type of capital market. I just hope it doesn't come at the expense of consumers. And this is the first time I've seen something where I'm like, that might actually be a little bit good for consumers. And it's giving me the tiniest fraction of hope.
Well, I would have changed my answer because I just realized you didn't say which is changing for good. So I'm going to say Polymarket and Kalshi, I think, are actually in the next 12 months going to have the biggest impact, but not in a good way.
Yeah. Okay, we'll have to leave it there. Before we go, though, just a heads up. Everyone up here has a podcast. You should be listening to all of our podcasts.
Sometimes all together in the same place.
Sometimes. And then these guys both have newsletters, Fintech Takes, Fintech Brainfood. Make sure you go subscribe. Anyway, with that, thank you very much, everybody.
Thanks, everyone.
That's it for another week of the world's #1 fintech podcast and radio show, Breaking Banks. This episode was produced by our US-based production team, including producer Elizabeth Severance, audio engineer Kevin Hersham. If you like this episode, don't forget to tweet it out or post it on your favorite social media, or leave us a 5-star review on iTunes, Google Podcasts, Facebook, or wherever it is that you listen to our show. Those actions help other people find our podcast, and in return, that helps us build an audience that can be supported by sponsorship, so we can continue to provide you with our award-winning content every week. Thanks again for joining us. We'll see you on Breaking Banks next week.